Together for Charmian, Josh and Peter. Over to you guys.
Hi everyone. It's great to see everyone at Intersect, and it's really pretty good to be back at a conference for the first time in a very long time. We're here today to talk about Limepay's journey to IPO and beyond. I'm going to tell you a little bit about Limepay. I'm pretty sure that you know who they are. Limepay is Australia's first enterprise payments FinTech to launch a platform that enables brands to power their own native white label checkout and payments experience. Limepay seamlessly integrates online payments and buy now, pay later solutions to provide a frictionless customer experience. Unlike other BNPL services, Limepay enables merchants to retain ownership of their customer relationships and data. And it does that through its checkout experience, which increases conversion rates and lifetime customer value. I'm a solicitor director at the Fold Legal, and we were involved in advising Limepay on their pre-IPO capital raising in 2020. And Limepay raised over $20 million in its pre-IPO raising, and it's one of the largest pre-IPOs for 2020. The raise was for the issue of convertible notes to new and existing investors, including institutional investors. And it brings Limepay's total funding to over $30 million since its initial seed round in December 2019. The funds that have been raised to date will provide Limepay with the balance sheet liquidity and operational flexibility to execute its immediate and short-term business objectives. And so Limepay is aiming to pursue an IPO in the near future. Of course, that's subject to prevailing market conditions. So Limepay's investors, board, advisory and leadership team have drawn from the very best of the best in terms of current and former executives. And some of the companies that they are drawn from are Zipco, PayPal, Accor, Telstra, Deputy, CBA, Equifax and PwC. Limepay's already built native integrations with Adobe Magento and WooCommerce platforms and has millions of dollars that are transacting through its platform each week. And representing Limepay today is Josh Edis. He's a Chief Operating Officer and co-founder. So just a little bit about Josh's background. He spearheaded new product and strategic growth initiatives for multiple technology, media and data companies over the past 25 years. And that's been in North America, European and Australian markets. With a proven track record in enabling technology and data-led businesses to capture market leadership positions, he was the catalyst behind strategic and distribution partnerships with a lot of global companies, including Google, Yahoo, Salesforce, Lexa and Equifax. Joining us today is also Peter Gaidzkar, and he's from Prime Financial. And Prime Financial have been on the journey with Limepay since early 2020. Prime Financial acts as a financial advisor to Limepay and a key strategist in its journey to raise capital and to access debt markets. And that's fundamental to supporting Limepay's capability to provide its lending services. Peter is a senior advisor at Prime Financial. He's based in Melbourne. He has over 20 years' experience as a corporate advisor. And in the last 10, he's been focused on early stage capital, expansion capital. He's also been a CIO for an ASX-listed alternative investment fund. He's worked across professional services at PwC and with various ASX-listed companies, and he's worked on a variety of successful transactions, including business and asset divestments, mergers and acquisitions, and capital raising and IPOs. So let's get started, guys. It's been a busy year for Limepay. On top of the pre-IPO raise, you also executed a really successful joint venture with Domain, which is the ASX-listed real estate group. So I guess, how did you manage to pull it off? I want to know what were the key ingredients to getting a pre-IPO raise to reach this level of success in the year of COVID?
Thanks, Charmian. Look, I think the raise for Limepay was no different to any other capital raise. Any business that's going to the investment market, you need to be ready to do that. You need to be able to obviously clearly articulate what problem you're solving, and ideally, which is you need to be able to prove that it's a problem that people are willing to pay for to have solved. I think, certainly in the 2020 year, COVID definitely shaped how we went to market. Given Limepay being an early stage business, we were initially looking at a private capital route, but given, I suppose, the BNPL sector, how hot it was, particularly with the listed peers, and I think certainly the boom in e-commerce, it really supported that pre-IPO pathway for us, which made a big difference, I think, in terms of the outcome.
Yeah, exactly, Peter, thanks. In terms of those key ingredients as well, before pre-IPO we'd already done a seed round and a further round in July 2020, so we'd already brought on some really important, valuable investors into the cap table. So individuals that, some of them were actually not only investors but customers in the business, such as Louise Daly, who's the co-CEO of Accor Hotel Group Asia Pacific, and her other co-CEO, Michael Eisenberg. And they participated in seed, top-up round and pre-IPO, which is we're very thankful for. There are other investors as well. Again, we talk to the importance of building the right kind of provenance in your investor base and your cap table. Other investors such as Mike Abede, who was previously GM of Enterprise at Telstra, Brad Banducci, CEO of Woolworths, invested in personal capacity, not Woolworths. So yeah, it's so important to target the right investors that bring the right credentials, that are buying in for the long-term journey. They've got to buy into the vision, of course, of the story and the founders. But you want people by your side through the tough times and the good times. The money's great, but the advice is even more valuable, and I think the backing as well, for Accor Hotel Groups, by example, having them behind us as one of those early foundation clients has just been invaluable.
So I guess once you've got some of those cornerstone strategic investors on the cap table, you're pretty well set up for the next stages of seeking further capital from institutional investors. I'm just wondering if we can pause for a moment, and Josh, if you can take us back in time a little bit to tell us a little bit about Limepay's journey so far and the experiences that you had back in 2018 and 19 when you were pre-seed, just so we can share a bit of that with the group.
Yeah, sure, and I think Limepay's journey, probably goes back, a few years before that. Tim Dwyer, who's the founder of the business, I think is speaking tomorrow actually around the customer experience and how innovation drives better customer experiences. But and I've known Tim for about 8 years or so, so we've been on this journey for quite some time. So Limepay's inception really started with wanting to solve for a problem that we saw as prevalent right across the e-commerce and the bricks and mortar retail sector, both retail and non-retail in fact. And that problem was really centred around a really crappy customer experience at the checkout. As we coined it, it's like checkout spaghetti. And Tim had first-hand experience of that, running a couple of e-commerce marketplaces where he was hosting other brands and merchants within that marketplace. And one of the biggest challenges he found, and being a very customer experience, design, UX, UI-led kind of founder, was that checkout experience was just cluttered with friction and complexity at the back end. And that wasn't going to lead to a great customer experience. So that was the problem I think we zoned in on. And so we weren't looking around us for inspiration from other BNPLs or payment providers. We were just squarely focused on what was not working at that last mile, that checkout. And so that was really the germination of the concept of Limepay, and that led us to asking ourselves some big questions, putting ourselves in the shoes of the merchant to say, well, what if we could solve this checkout spaghetti problem? What if we could break through this friction? And what impact would that have on the customer experience? And then consequently, what kind of economic impact would that have on the business? If you could solve for those problems, remove the friction. And one of the hypothesis was we could dramatically reduce dropout or cart abandonment at the checkout. We could essentially deliver a much slicker, seamless user experience. And importantly, that would ensure that the merchant retains control over customer experience, retains control over the customer data, both the payments flow data and of course the identity data. And that should lead to a better longer term lifetime value outcome. So yeah, and that leads to our value proposition today. It's your checkout, it's your customer, it's your data. And we can perhaps touch on the data piece a little bit later.
I think it's a really interesting proposition because it does distinguish Limepay so much from other BNPL and checkout payments providers. They're leveraging the merchant's brand all the way through the process. And I guess it also means that you don't need to throw a whole lot of cash at building your own brand and your marketing to be able to reach the customer. Peter, I'm keen to know when you guys, Prime, joined the team and what the key capabilities are that you believe are necessary to build out a management team to take it on an IPO journey.
Yeah. We came on board with Limepay in early 2020. And I think, we're probably a little bit different to other corporate advisory firms. We really do take a long-term view of the clients that we work with, and we probably act more like an in-house corporate development team rather than an external advisor. So, we had the benefit of coming on early with Limepay and, working with Josh and Tim in particular on what they were going to need to support the business going forward. And certainly, that management team is one of the key things that you need to look at, and we help them build that and put that in place over time.
So I guess with startups and then scale-ups, they may not have all of the elements of that management team that they require to take them on the journey. So how did Prime help Limepay with that exercise?
Yeah, look, I think for anyone who's in a startup out there in the audience, certainly in the management team and the founders wear many hats. And, some of those roles are really hard to navigate through as the business starts to get larger. One of the things that was probably missing in the Limepay team was they didn't have a dedicated CFO. It's probably not so much of an issue for an early stage business, but in terms of where Limepay was at and the fact that we were looking to do a pre-IPO and leading into an IPO further down the track, when you're looking to bring on institutional investors, that kind of role is really important. So we actually placed in their business a virtual CFO who basically was in that role throughout the pre-IPO process and actually worked with the Limepay management team to conduct a global search to find Mark, who's now come over from London, to sit in that role going forward.
Josh, how did you manage to find the right financial advisors? There's investment bankers and there's lots of other partners that are needed for a journey like this and also for the capital raising exercise. What were you looking for in those sorts of relationships?
Well, I think the most important thing to get clear in your head when you're looking to engage with external advisors, corporate finance, equity capital markets, specialist lawyers, is focus on trying to stretch yourself out a little bit into the future and understand what kind of outcome you're looking for. Importantly, make sure you get the personality and cultural fit right. It's one thing having the skill set, and there's plenty of advisors out there that'll bring the core skill set. But you need to have that alignment and that connection with the advisory team. I think in 2020 we must have dealt with no less than 7 legal firms. But that was by design. We needed to engage with particular specialists in particular areas, from FinTech regulation through to equity capital markets, commercial lawyers and the like. So we've always been about coupling ourselves to the A team members, and teams such as Prime, Peter and Tim over there we see as an extension of our team, as opposed to an external kind of advisory. But having that arm's length relationship, so to speak, enables you to ask really tough questions of yourself, and for the advisors to hit you up with the tough questions. Because what you want from your advisors is help to, no one's got a crystal ball, but you need help to see around corners, what might be coming next. Not just from a macro external markets perspective, but you need to put yourself in the shoes of investors, for example, institutional, high net worth, venture capital. We engaged over months with many target prospective investors here and in the US, both on the private side, venture capital and equity capital markets guys, to get a sense of how our narrative resonated with those various different markets. And that was an important sounding exercise to help inform what became, down the track, a pre-IPO capital raising process.
So now that you're through the pre-IPO and you're looking into the future, it's fair to say that you want to IPO and you're expecting to do that in the near future. What goes into the decision to do that rather than to remain private and to remain connected to the venture capital markets? Why would you IPO?
Yep, good question. Peter's probably got some angles on this too. But look, for us, we had run a process, and it was important that we did run to a process. So we deliberately set out on a journey to engage with both venture capital, private investors, and the equity capital markets advisors in the market, both domestically and internationally. Of course, we had the benefit of hindsight, and that there's an entire sector of FinTech and in particular BNPLs on the ASX. So we're able to look back in time, understand where companies like Afterpay were at a similar stage to where we were, looking at their key metrics. How were they tracking in terms of number of merchants, their default rates, revenue trajectory, and so we had some benchmarks to work with. And by working with Prime and also later on Ord Minnett in the pre-IPO capital raising, we were able to do some deeper analysis of what the Limepay narrative and the growth trajectory would look like in comparison to a basket of peers, which is an important kind of sense check to understand, well, what's going to be the right kind of pathway for the business, what's going to create the optimum, I suppose, pricing and valuation outcome, low base, kind of high outcomes. So that was, a key part of that engagement and that process that we went through with Prime and Ords.
Yeah, I think, just to add to that, I think, look, we're really lucky here in Australia. It's a fantastic place for fintechs, and really, it's probably been supported really well by the fact that we do have these big four behemoth banks there. It makes it a very attractive market from a fintech point of view. As well, I think, the likes of certainly some of the BNPL peers like Afterpay, really we've led the market or led the world in terms of what we're doing from a fintech point of view, and also from an investment point of view as well. In the public markets, I think fintechs are probably understood better here than they are in other markets overseas, which means it's really attractive for a business like Limepay to look at IPO, because ultimately, really what it is, it's just another capital raise.
Yep. What do you guys see as the most immediate challenges in the journey to IPO in the next however months that might be?
Well, I think, again, IPO is just another capital raise, so it's the same. The biggest challenge really is that, capital raising is not what founders and management teams want to be doing. They want to be solving customer problems. They want to be customer-centric. It's a huge distraction to be out there every day presenting, meeting after meeting after meeting, possibly getting knockback after knockback after knockback. So I think the biggest challenge is really for that, the founders and the management team to ensure the business continues and they keep hitting their numbers and doing what they say they want to do.
Yeah, spot on, Peter. Again, you got to come back to process, right? Our management team worked with Prime and Odds to kind of map out who was going to be involved in those initial pitch presentations, and then how we're going to manage the ongoing kind of process from there. You can't possibly underestimate the amount of time it takes out of your day over many, many months to dedicate to that process. But we were careful not to spread the management team too thin. So that's sort of where I stepped in with Peter and the team to lead that, and kept Tim and the rest of the team kind of focused on execution and I suppose the key metrics that matter. Winning customers, hearts and minds of customers, focusing on that product innovation journey, and that all fed into the evolving story as we're engaging with investors through that process as well.
We were talking a little bit earlier about how important it is to retain talent, and how the culture of a business like Limepay is so fundamental to where it goes in this next period. Whenever there's capital raising of this magnitude going on, it puts a lot of pressure on the team. What are the things that you feel, Josh, you guys do differently that helps promote that positive culture?
Yeah, I suppose there's no kind of proven formula to building sustainable, really lively and unique culture that attracts and retains and excites your people. But from day dot, there were some key values that we thought were going to be pertinent to our ability to sustain our growth journey, and themes around openness and transparency and being comfortable with vulnerability. In other words, asking the tough questions of each other and expecting our advisors to do much the same. It doesn't every day. It's like people ask me all the time, and ask Tim all the time, what's the number one thing that keeps you up at night or wakes you up in the middle of the night? And it's it's people and culture. It's trying to get those settings right. You want people to be bouncing out of their home in the morning, or perhaps during COVID, getting out of bed and into the office next door with the right energy settings, and knowing that the leadership team has got the settings right around the vision, and that also includes creating the right environment. So we ensured that we set up a great environment hub. Sydney's our HQ. We're in the heart of the city there. We invested a lot of energy into setting up the right kind of place where people could collaborate, but also feel comfortable getting the work done from wherever they are. And COVID was just accelerated that whole process, and the team were able to demonstrate to each other that they had each other's back. They could trust each other to focus on the work that mattered. Half of our team is software engineering, service delivery design, UX, UI. So collaboration is critical. Just because you've got the tools to enable that doesn't mean that that collaboration is going to instantly happen. You've got to build those bonds over time amongst the team. So it's a continuing challenge and opportunity for us. I think it's probably been accentuated as well by the closed borders. So we've had to source our talent from within the boundaries of Australia. Haven't been able to look with any great degree of confidence into hiring from international markets. But yeah, that talks about the next phase of the journey as well.
So I think IPO is definitely not the end game. It's going to be a massive job to get to the IPO and beyond. I think there's some opportunities there to scale internationally, and I'm keen to know, what Limepay has in mind for scaling overseas, and what sort of opportunities you see over there.
Yeah, I suppose IPO or otherwise. I mean, being IPO ready and getting the team match fit for IPO is key. Part of that journey is ensuring we've got the strategic narrative spot on and demonstrating to ourselves and to investors and our clients, our merchants, that our platform will enable us to scale up into multiple international markets. And the tech team's done an awesome job of designing the core platform in a way that will enable us to scale up to meet those opportunities in international markets. The joint venture with Domain that took up an enormous amount of time as well last year, as you know, you worked up very hard on that. That was key to us. We could only place so many big bets during 2020 with the limited resourcing and funds that we had, but we knew we needed to demonstrate that we had the technical and commercial chops to deliver a big enterprise platform solution with the likes of someone like Domain. That's just one of many verticals that we saw as opportunities in which we could take this native white label platform into. So we successfully executed against that joint venture partnership and launched that a couple months back, and Domain's doing a great job of scaling that up. They're essentially our go-to-market sales partner. We provide the platform, they provide the distribution, so it's a one-to-one to many scale-up effect that we unlock with Domain. So we're going to take that as, I suppose, a case study, a benchmark for how we go about identifying and coupling the Limepay platform to further enterprises and other platform and marketplace businesses that enable us to unlock that network scale. Because as an aspiring scale-up business, no matter how much money you throw at talent and growing the team, you're still not going to move fast enough in order to create that true network effect. So that's a key focus for us to get those settings right. So some key focus areas for us around getting the product development priorities really set in advance, 12, 24, and outwards into the kind of blue sky 36 months, ensuring that we're focused on distribution opportunities that create that one-to-one to many scale-up effect, and exploring a range of different partnerships that will enable us to establish a beachhead into UK, North America, potentially Southeast Asia. Got some interesting conversations going on in EMEA at the moment. And so there's some key ingredients that we're looking for that were present, for example, in that Domain partnership that will enable us to move faster, to deploy capital as effectively as possible, and indeed wherever possible to even leverage the capital and the balance sheet and the distribution of our partners as well. So it's not all about raising funds to deploy another version of an organic team in Australia in these various different markets, and besides that's super hard to do in this current COVID environment anyway, so partnerships is going to be really key to that international execution game plan.
Great. We're just about on time now, and so if there's any questions from the floor, we might take those.
Good, we've got some questions.
If I can be so cheeky as to ask two questions, both quite different. So first on the IPO, it was a very hot market last year. It's still a hot market in terms of IPOs, but certainly in the buy now, pay later market, a lot of your second tier buy now, pay laters aren't performing as well. So I'm just curious, what gives you the confidence to IPO as another buy now, pay later, and what would prevent you from doing that? Second question is there's a lot of concerns in the market around responsible lending and buy now, pay later customers being encouraged to spend more money. It is very retail focused, increasing your basket size. How are you positioned to address customer affordability and responsible lending should we have regulation like we've seen in the UK?
Peter,
Thanks.
do you want to take the first question around the timing and what the market's like?
Yeah, look, you're exactly right. It was a super hot market last year. There's certainly been some of the businesses in the sector that aren't performing as well this year. I think from Limepay's point of view, it's a sort of wait and see approach. Certainly we've undertaken a pre-IPO and the desire is that we will IPO in the future. The timing around that, is not set, and it's really going to depend on the prevailing market conditions. And as well, it's going to depend on where Limepay's at from a business point of view. So we need to ensure, first and foremost, the business continues to add, new logos, new customers on board. I think one of the benefits that Limepay has is that really it is very enterprise level focused in terms of its merchants, and they are all acutely aware of how do we continue to really ensure that we own the customer, and that we continue to provide value to the customer, and importantly increase that lifetime value to a customer going forward, which I think is, clearly differentiates Limepay from some of its peers, and that's why it's been so successful from a enterprise level point of view.
Yeah, exactly, Peter. I think ask our merchants why they think we're differentiated from all the other, I suppose, consumer-facing BNPLs. And it comes back to solving for those key problems around controlling the customer experience, not letting that customer data leak out to third-party marketplaces, such as your Afterpays. Although they certainly have a very important role to play in a merchant's infrastructure. I suppose to the second point around regulation, I think any form of regulation, be it in the unregulated or regulated credit markets, is welcome, so long as it's about driving choice and flexibility for the end consumer. And I think similarly for businesses as well. If we can get those settings right, that drives further competition, and that's going to drive innovation. And I think those technology players, fintechs, with the more, I suppose, sustainable business models, and that also includes a responsible and ethical approach to lending. They'll be the ones that are still standing at the end of the day, because we can't possibly sustain as many Me Too BNPLs that are out there. There's only so many consumers in the Australian population. Well, there's only 14 million working people, so there's only so much money that can be directed towards these consumer BNPLs. So I think consolidation is inevitable. That will, I suppose, drive some level of concentration of activity. So watch this space, I suppose.
I think we had another one down the back somewhere. Could you pop your hand up if you still want to ask a question? No, everyone's hungry, I reckon, or everyone is keen to get networking. So, ladies and gentlemen, can you please put your hands together for Charmaine, Josh and Peter for that session? We're going to take a break for an hour. We'll see you back in here at 1 p.m. to talk neobanking with Joseph Healy from Journery.